Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market swung widely this week with a huge bounce early in the week coming from a big oversold condition. Really gave way to a big downside resumption later in the week on Thursday and gave up most of the gains that we had seen. Tuesday's big bounce came as investors celebrated some good earnings reports, specifically out of Netflix and some of the banks, and that was a good excuse for buyers to pick up some of the really depressed shares that they thought were a good value. Then the market stalled later in the week when the Fed minutes came out, and they were very hawkish. They're concerned about asset prices, actually thinking about that now, and willing to get restrictive and stay that for a while. They're trying to get normalized, is what really they say. And that's funny because it became abnormalized because of them, keeping interest rates down to zero for close to 7 years and now trying to get caught up before the market starts to sell off hard and the economy goes into its next recession time, them having no bullets. So, of course, interest rates still very low and very accommodative historically, so they still believe that there is some distance to go for interest rates before they get to some level that they're comfortable with. And there's a lot of the Fed heads talking out there that they're comfortable with rates moving up right now, and we certainly could see more of that. The markets had been weakening, as I said, late on Wednesday and into Thursday, and then news came out that Secretary Mnuchin was canceling his trip to Saudi Arabia, which was the Saudi Financial Summit, which is a big deal, and a lot of countries canceling out of that because of the bizarre and scary news coming out of that country about the Saudi journalist who has disappeared. And there are all kinds of rumors about his horrible demise, which I don't even want to talk about here, and what happened to him. If it may be just enough to accomplish what maybe the Saudis want, which is to scare off their critics. And this journalist was a big critic of the rulers there, and so now he's disappeared. And now it looks like the president our president is afraid to piss off the Saudi rulers because they are, of course, big allies for us in the Middle East, and that has him maybe backing off of what should be a hard line, and the people in Congress are really after him to take a hard line against the Saudis, and with all of these countries backing out of participating, and big banks backing out of participating, that's probably going to go off as a very weakened summit, and much more could come out of this, and it could get worse, especially if some truth comes out about his death being a result of some of these, well, torturous type news items that we're seeing coming out about that. So that's pretty horrible news, and that just the fact that Mnuchin was backing out and that it was a sign of some weakening with our relationship in the Saudis was a good excuse for the selling to come back in the market. The nature of this stock market has clearly changed, and you can see that. The declines that we see so far from peak to valley in this correction, S&P 500 at worst level down about 7.8%, NASDAQ about 10%, the Russell about 12%, and those are pretty sizable down moves that came very, very quickly. The damage in individual stocks is really significant. Actually, much worse when you look at Facebook, at worst levels, some 30% off of its highs. That was a giant leader in here. Netflix, even on good earnings, still down at 16% now off of its high. It was down as much as 24% off of its high. That one could be in a lot of trouble coming into next year. And Tesla doing everything that it can, scrambling to make up the nightmare that Elon Musk put on this company. And they're down at worst level about 34% from their peak. So some of these high flyers got absolutely wrecked. Talk about wrecked. Even financial stocks did so, with Goldman Sachs down some 22% from its peak to trough, and Morgan Stanley 27% from peak to trough. So the financials normally good leaders in the market, and they are, if anything, leaders now on the downside. When this happens, this type of action that we're seeing in these stocks, it's very high odds that rallies will continue to fail. And we're seeing that. We're seeing that this week, and that's really the type of action that we would expect. What is that action? Well, when impulses come, in other words, an energetic movement in the market, onto the downside, they're much bigger and last longer than the moves to the upside. That's the nature of the market that we're seeing, and that identifies negative momentum, a negative trend condition that exists now. Of course, our work is on time and price, and as you get into the rest of the show, you will see more about that as we project out on all the stocks that we look at and the indexes to where we think the declines will go. We have been talking about the risks in this fall time period right now, and that risk continues. Our analysis continues to show that there can be big declines into late November. That's the time frames that we're looking at in here, and we don't see any of that as having changed as we look at the market in here. Everything that we look at really points to, even though there are rebounds, to continued choppy downward action in the market. And we'll talk about some targets, at least for the near term, later on in the show. Let's take a look at our 60-minute chart of the S&P 500, and you'll see right in here that the gray area that you're looking at is the overnight trading, and the white area is the pit trading. Us pit traders from the past still use that kind of language. Let me grab my pointer here for you, and I will show you the what happened during this week. So on Monday, you can see the markets were weak overnight. The world markets were weak on Saudi tensions and the threat of sanctions on them. E-minis got to 20 overnight to the downside, but then they had a better time of it most of the day. And you see what I'm talking about? Impulses to the downside bigger than impulses to the upside. You could see that in these red and white bars, this big decline that came here on Monday. Tuesday, Adobe beats. That started off what was a string of good earnings reports. Goldman Sachs, Morgan Stanley beat. That lifted the financials, and these depressed stocks really started to get bought, and the shorts really started to cover. Look at these moves here on Tuesday. Just a massive upside move. The major indexes, well, up 2 to 3%. S&P's up 60 points. The NASDAQ was up 207, but the futures, because of Netflix earnings after the close, they got up as high as up 290 on the day in NASDAQ futures. That is nutty movement. Russell was up 43 huge, and the Dow up 547 points. These were big moves here on Tuesday. Wednesday or Tuesday after the close, Netflix earnings came out, and they surged, but then that surge faded. IBM got hit big. I'll show you that chart and the nightmarish breakdown that we see in that as we get to a later part in the show. Housing starts were weak, and on Friday the existing home numbers came out really weak. HD and Lowe's got downgraded because of that, and home builders got hit. So So they opened really weak in here and then got a big rally until the FOMC minutes, and those worried investors as they're worried about asset bubbles, really, and they're willing to be restrictive, and rate hikes continue. That's basically what they said, and the market chopped around Wednesday afternoon. Thursday was the bad day in here in the markets. It starts out with China stocks down 3% on their own liquidity issues. The yuan is plunging, and what's really going on is that they're not stabilizing the yuan. They're not stepping in, and President Trump is angry at them because they're not manipulating their yuan to the upside now. He doesn't want them to manipulate their yuan, but then he wants them to manipulate their yuan to the upside. So go figure that. Italy got yields just explode as they got big issues with the EU, and they are very much threatening leaving the EU. And oil inventories had a huge build, and oil moved down $2 and killed the energy group. And they were weak, and then the news came out that Mnuchin is out for the Saudi summit, and then that market had that big decline here on Thursday, practically reversing everything that we had early in the week. And you can see reversing and getting lower than it was even starting out on that Tuesday move, sorry. Friday, China actually moves up after weaker growth. They're down to 6.5%. Yeah, I know that doesn't sound very weak, but when their growth was plus 10% before, that is weaker, and it continues to get weak. And there is a lot of concern about that. A massive amount of debt that's out there in China is an issue. Friday, existing home sales, they're down again, and that kind of killed that upside move in the market that we were seeing. That came on some stronger earnings reports. We got some very nice upside gains in Skechers and PayPal and Procter & Gamble, and those were all big upside movers. We'll talk about some of those later on. And you could see it faded away and now is just chopping around with 2 hours to go in the market, and the S&Ps are managing about an 8-point gain right now, but it could be up 20, it could be down 20. I mean, with the way this market is acting, you never just do know, because as I say, volatility is here and the market is extraordinarily nervous. For the week, we had a very mixed situation in the indexes. Stock market, we'll call it narrowly mixed after that big upside move that failed. Bond market down about a 0.5 point, and the 10-year notes are also down a little bit, lifting the 10-year yields up about 5 basis points. The dollar up about 0.4%, as we expected, but I think trouble is brewing. We'll speak more about that in the short-term view. Gold up about $8 of the week, and I think there is something brewing in there, but it may be more to the upside. If you watch our recent big picture analysis on the gold and gold stocks markets, you'll see that, you know, we really spoke to what could be a pretty good period coming ahead. Also, this yesterday on Thursday the 18th, we did a big picture analysis on the stock market. Thank you to those who wrote emails to me about how important that analysis was to them. So thanks a lot for that. And the oil market this week down about $2, as it does appear that there is plenty of oil out there. The big worry is about Iran's oil and sanctions coming, and supposedly Iran has moved a lot of oil pre-sanction period here. So there could be a lot of oil out there right now. We think that there's an important period coming in here for the oil market, so stay tuned for the short-term view coming up. So I think that you'll enjoy that today, because there's some important spots coming up right now. That's it for the opening of the show. Stay tuned. Take a quick look at what askSlim is all about. All right, make sure that you follow us on Twitter. Become a YouTube subscriber. Make sure you like this video. It helps us if you give us a thumbs up. I want to talk to you a little bit about, I just showed you much of what we do here at askSlim, and I want to talk to you about what it takes to bring all of this content to you and who we have that work with the company. Arvi is our cycle analyst, and you see a ton of his work, especially in level 3, our rankings and trade setups. Eric's our social media manager, and you see the stuff that he sends out on social media every single day. Matt is the head of our product innovation and business development. He's working on all kinds of new things that we're going to be bringing to you, and some good surprise ones that are coming out in the next week or so. Debbie is the head of the website management and development team for that, and she's got 3 or 4 people that work with her in order to keep the management of the website going. And we have 3 interns that are working for us right now that are putting together some very interesting things that you're going to see. And of course, all of that is support for me, so that I can keep working on the things that I do, bring the analysis I do, and bring the content that I do, and interact with our level 3 and level 4 members on a regular basis. And hopefully all of them working lengthens the time period I can work before I head into the world of retirement. Hopefully that's not too close from now, but they all support that, and we'll be the ones that help carry it forward in time. We need you to help us support all of this so that we can keep bringing you this content. We've had lots and lots of people sign up for level 1 in recent weeks, the free membership, and we need you to step up to become premium members. And if you're a premium member, you might want to upgrade. And if you're just looking in at the first time, maybe you just want to check out our stock index report, which is an incredibly in-depth report. For $19 a month, you're going to get our weekly charts and all of the momentum studies that we have. It's just a very informative report that all of our level 2, 3, and 4 members get. So I really want to encourage you to keep supporting us, to consider becoming premium member, and to support the huge team it takes for this very large business that we have growing here right now, and want to continue to keep bringing to you. So thanks a lot for looking at that and for listening to me. And now we're going to get into the charts for the best of the week. We're going to start out by looking at Skechers. Skechers is the big gainer for the week. We have been very negative in Skechers, and as a matter of fact, we had anticipated that it would break below $22 in this declining phase that it was in. That has actually changed right now, and the reason it's changed is because of the rhythms in the market. They're showing us what's going on, and that's the importance of this type of work. If you're just seeing it for the first time, these are cycle brackets. Those are simply guides. They tell us where the rhythms of the market is, and you can see that each of those lows, the important lows or declining areas, bring those declines into those areas where it suggests the end of that correction will be, and then be moving to the upside. That's what just happened right over here. You could see that the bottom was due, and then it took off to the upside. Right on its earnings report, analysts upgraded, earnings beat. Now, this is the first week up. Now, granted, it's under the sell zones, under resistances. It's pulled back from the 34-week moving average. We use 34-week moving average on here, and the 13-week moving average right there, and the Hull moving average. Those are the 3 moving average indicators we have on our weekly charts. This big up week that you can see right there is week 1. Why do I label it week 1? It broke out above the downtrend that was in here, right at the point where the cycle was turning into a positive phase. If you look at the last cycle, it turned up right over here and then actually rallied, but not real significantly, right to the sell zone for about 5 weeks. You look at this big up week over here, it corrected for a few weeks, but then exploded on the upside again. The odds of the first week being the high are less than 1 in 20. So that 1 in 20 cycles will do this and then peak and then move straight down. The rest of them will challenge this high or get higher. So we have a target in here above 33.5, and you can see our projection in there is based on the cycle. So Skechers, a big up week, biggest gainer of the week. It's now up about 15% on the week because it gave a little of that back as the market pulled back in here. But that's a great example of how we use cycle analysis. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.